Welcome to the source of commercial real estate, where we talk to the experts in non-residential commercial real estate so you can grow your business, find a competitive advantage, and use real estate to live the life that you want. I am your host, Jonathan Hayek, and today I am back with Mike Holdwick with Pro Team Commercial. Today we are doing a little bit of a different kind of episode. You heard Mike on this podcast a few weeks ago. His episode dropped February 6th. If you have not listened to that episode, definitely check that out. Mike is an inspiration. He has a lot of good things going on. He is basically crushing it, seemingly in all aspects of life. And so today, Mike and I are going to have just more of a conversation. We are calling this for now Everyday CRE. And basically, instead of an interview format, this is going to be two guys in commercial real estate with lives, hobbies, kids, spouses who are trying to balance everything in life and trying to excel in everything in life. And so this is going to be more of a back and forth discussion where you as the listener are going to be able to get to know Mike and I a little bit better, a little bit more on a personal level. So in this series, I anticipate us talking about things like deals we're working on, our perceptions of the commercial real estate market, how we manage to fit commercial real estate and our portfolio into the rest of our lives with our families and our hobbies and our spouses. You know, we want to grow our commercial real estate portfolios, but not necessarily at the expense of the other aspects of our lives. And so we're going to go into some of those topics. And I imagine those are some of the topics that you as the listener are also struggling with in your investing journey. I imagine we're going to talk about current events in commercial real estate and hopefully just have a genuine conversation that you as the listener can relate to and connect with. We hope this will be an open and transparent conversation for you to get to know Mike and I better. So, Mike, thanks for agreeing to do this with me. How's it going today?
I'm fantastic. Thank you, Jonathan. I am flattered to be welcome back because I don't always get welcome back for a second time everywhere I go. So this is great. I am so excited to do this. I love the format, and I think it'll be really valuable for people to just hear what we have on our minds, stream of consciousness.
Mike, I have to admit that I am not much of a social media person. Part of me really despises social media, but I've been working with a coach recently who has been encouraging me to get back into social media and bring some of my accounts back from the dead. I am begrudgingly doing this, but you have been active in social media. I know that's also kind of a new thing for you. I was
Yes.
looking at your Instagram. I'm not a scroller, but I was on Instagram and I'm like, let's check out what Mike is doing. And I saw this random picture of you organizing an axe throwing event. Can you give us some explanation? I think this was like a real estate meetup. Can you explain what this axe throwing event was?
Yeah, I can. We're trying to bring back something that I feel like was lost a little bit through COVID, and we want to just have good old fashioned networking events, right? Where we get like minded people in the same room and talk about something that really interests us and gives us energy. So, last year, Larry and I, with Pro Team Commercials, started organizing meetups, and we did three last year, and we're targeting quarterly this year. And we just want people in our network who live locally that are interested in commercial real estate to come out and have a few drinks and throw some axes and hopefully nobody gets hurt. But we really want to use this as a way to build energy and make connections behind commercial real estate. So at this event, we had some investors, we had some, commercial agents and brokers. We had some of the people that help us with our underwriting and due diligence. So we had our guy that handles our environmental there and property inspector. So it was just kind of cool to get all those pieces of the puzzle together and then see how they interact together. It was really fun for me and a worthwhile event. Actually, we got some really strong leads for investors coming out of it as well. So it was a big success.
And did you like advertise on meetup.com? Were they just like personal invitations? How'd you target people?
Yeah, so it was all personal invitations. We also blasted it on social media, and we got a few people that were not necessarily firsthand connections, right, of myself or Larry. So that was kind of cool to see some of the more general public come, but it was mostly done just through our social media channels, which we're focusing on LinkedIn and Instagram right now.
And so this is cool. I've been to real estate meetups. I've never been to an axe throwing real estate meetup before. They've been more like in a conference room or, potentially at a bar or restaurant. What other ideas do you have for meetups? Are they all going to be axe throwing or some extreme and dangerous activity, or what else do you have in mind?
No, we do want to keep them entertaining. The thing that Larry and I joke about is we don't want a stage with an audio video guy in the back and any fireworks. We want to build them around a lifestyle because we believe that real estate investing is a lifestyle and it promotes living a fulfilled life, right? So we want them to be entertaining. This summer, we're organizing a golf event, so hopefully we can get a handful of foursomes together and just spend some time on the course. We've also discussed, but have not done yet, so maybe this summer is the one where we do a boating meetup. So summers here in Michigan are really nice for boating, lots of lakes, and we want to get some people out on the sandbar hanging out too. So those are two on the list right now.
Yeah, that's great. It sounds like more of kind of a fun recreational thing. The meetups I've been to in the past have been like a little more serious and informative with a speaker, and we're learning about how to invest in real estate with our Roth IRA
Yeah.
and stuff like that. Is there an aspect like that to your meetups, or is it just like really more fun and networking?
Fun and networking. No pitch. You don't have to sign up for anything. This is just simply fun and networking to meet people where they're at because everybody is at a different spot in their real estate journey, right? Some people are just starting out. They're in their early 20s. They're curious about it. Other people are ready to invest, but don't necessarily want to be hands on with it. So we want to meet people where they're at and just kind of bring them along on our journey as well.
Awesome. Best of luck to you. I might have to come to Southeast Michigan sometime over the summer boating on, I think you said a sandbar. I'm not really sure what that means, but it sounds very Michigan. I grew up in Illinois,
Yeah.
and I have family that live in Southeast Michigan. I think I have family that lives really close to you.
Okay.
And I'd vacation in Michigan almost every year. And so I do have an idea about the Michigan culture, the lake culture of
Yes.
that Michigan has to offer. And so boating on the sandbar sounds very Michigan. So maybe I'll come to one of your meetups sometime. That
Let's
sounds
do
really cool.
it.
Cool. Well, Mike, I'm working on some deals. And so I'd love to go into kind of what we're hoping for 2024. And I'm working on several deals. I look at deals every single day, and there's this cliche that in the real estate world over the last 18 months that it's a cliche because it's true that sellers are still living in like 2020 and 2021 times in terms of their
Yes.
pricing. But
Hmm.
I don't know about you, but me personally, I'm seeing some slightly more realistic sale prices, real more realistic offer prices.
Yeah.
They're still not quite where they need to be, but they're at least seemingly coming sort of back to reality, or we're on the same planet. What about you? Are you seeing some of that, or are the deals you're looking at priced still in ridiculous terms?
I'm noticing the exact same thing that you've noticed. So I would say I don't know if it's directly related to interest rates, but the change in the market that I saw correlated really strongly with interest rates. So I would say fall 2022 and through most of 2023, I've never looked harder for commercial real estate deals because I was really trying to force the issue, and we had built our business to such a place where the one missing piece was that next deal, right? We had the investors, we had the teams to manage the properties, and we just needed something that penciled out, and we looked at deals and looked at deals, and you know what? We just could not get one to fit in a box, and we almost found ourselves trying to force the issue a little bit, and now I'm really happy that we didn't, because I would say late summer, early fall last year, all of a sudden the deals started to look a little different to me, and I, like you, have some deals in the hopper. We're actually under contract and about to close in 2 weeks on a 3 tenant medical office building. So there's two general practitioners and actually Edward Jones, so one financial advisor whose lease is corporately underwritten. Um, we're closing on that in 2 weeks with an estate situation. So the previous owner had passed away. The two daughters didn't want to hold the asset, and we got some pretty good land contract terms on that with a reasonable ask price and value add on rent renegotiation. And then we have an industrial deal now, which was a retirement situation that we're looking to bring investors along on. So I have found the exact same thing that you have, that it seems like the market is thawing a little bit and the deals pencil again.
You have this way of finding these crazy good deals. Your first deal was this ridiculous, like 1.5% medical deal. And now you found this other 3 tenant medical deal that sounds like a great deal with seller financing. Is this, is your partner's a broker, right? And so is your
Yes.
partner bringing these opportunities?
Um, of the two deals, one was brought to us by actually another broker. So not my business partner, Larry, but somebody that I had actually done a deal with where he represented one of the tenants. He represented a dog groomer, and I think I told you about that building. She was looking for a space in the same market. And I just really struck up a good relationship with him, even though he wasn't representing me at that time. And through putting together that deal, I just pretty much told him we're looking for more assets. We love this market. And he's just really focused on this one county, knows it well, has his ear to the ground, and so many good connections that this fall, out of left field, he just kind of emailed me a deal and he said, "Hey, Mike, this is something you might be interested in." They were asking 925. We negotiated it down to 825, and we're coming into it at above a 10 cap, and that's without tenant renegotiation. And we negotiated hard on the land contract terms, so we got them down to 5% interest, and it has a 7-year balloon on it and a 20-year am schedule. So the way the numbers kind of work out is it's going to be $2,000 to $3,000 net cash flow per month, and then we'll also have a couple $1,000s of principal pay down, through the land contracts. So I'm looking at it as a $4,000 to $5,000 a month deal. So it's a nice one.
Yeah. Congrats. So 2 weeks, you'll close on that in 2 weeks. Congrats on that. I have been working on one deal in particular, um, and it's a similar situation. The sellers haven't passed away, but they're uh, retiring, and it's just time for them to move on from this property.
Yes.
And I've been going back and forth with them for what feels like months, and it's going to happen. It's also a seller financing deal, and it's a multi-tenant flex property. I really like the flex product.
Oh, sounds
Um,
great.
just small units, typical office warehouse, small office, small bathroom, and then a warehouse with a roll-up door, blue collar tenants. Um, these types of uh, these types of units are in really high demand. Should be easy to lease these suites up. So I am. I've got my seatbelt on. I am prepared for this deal to continue to take a long time. There's just been seemingly uh, not a lot of like the sellers want to sell it, but there's just not a lot of urgency from the
Yeah.
seller side. But at the same time, I know that if they're acting that way with me, they're probably acting that way with other people. So I don't suspect that I've got other competition on it. So I'm hopeful that it happens, but kind of like you, I'm I'm trying not to force anything. When something happens, it happens, and I am prepared for interest rates to be higher for longer. There was some initial enthusiasm, I think, like December, January timeframe, with the Fed indicating that there would be some interest rate relief at some point this year. And some people were projecting like 6 interest rate reductions this year.
Yeah.
And that just seems really far fetched to me. I think there's potential that we'll see some interest rate relief at some point this year. But I think earlier this week,
Yeah.
we're recording February 16th. I think earlier this week, Tuesday, Wednesday, we got some not so good CPI numbers that are showing that inflation, that core inflation CPI number, is staying stubbornly high.
Yes.
And there's been a lot of hope that potentially at a March meeting that there's going to be some interest rate relief, and the economics people that I listen to are indicating that's almost certainly not going to happen in March. I think they're going to meet again in May, and maybe there's a hope for May June timeframe, but we're going to get a lot of data before then, and a lot can happen. And so I think the way I'm proceeding with interest rates and financing terms is things are just going to be higher for longer. And
Yeah.
I'm not really anticipating a whole lot of interest rate relief this year. What are you thinking? I know this deal that you're on, a seller financing, I think you said 5%, which sounds pretty amazing.
Yeah.
Um, yeah, how are you thinking about financing and interest rates?
I'm looking at it the same way that you are. I believe that rates are going to be higher for longer, and until we see CPI down in the twos, below 2.5 probably, based on the Fed's charge and mandate, I just find it hard to believe that there's going to be a series of interest rate cuts. And the reality is, even if they cut a quarter point or an eighth of a point, does that really change what we're trying to do? So I don't want to hold my breath because I'm old enough now that I've been through market cycles, and I'm kind of taking a dollar cost averaging approach to real estate, right? I look at it where I want to buy one building a year. And I think that's tangible and doable for anybody in real estate, right? I think the price point that you pursue varies based on where you're at in your financial journey and your real estate journey. But I've always taken a very simple approach that if I can get one property this year, then I continue to move towards my ultimate goal, which is a pipeline of passive income through real estate. So I'm going to continue to do that through all the market cycles, unless the deals just don't make sense. I'm never going to get into a deal that is negative or skinny cash flow. I'm going to say no to that because I've lived through the Great Recession and I know that real estate values can go down. I'm not projecting that, but they can. Large, unplanned capital expenditures do happen in real estate. And I want to make sure that I have at least 10% positive cash flow so that I can set money aside and make it worth my time to continue to invest in real estate. So I'm really not going to consider anything underneath that. But if I can get it to pencil and I can get closer to 15 or 20 with some value add on it, then I'm really getting motivated. Those are the deals that I'm looking for.
How do you think about buying home run deals versus solid singles and doubles? And I know that's like uh, a generalization, and it can be different for different investors at different points in their life, and it really depends on goals. But there's some people that say don't buy any deal that's not a home run, and other people are talking right now where they're saying things like now is a singles and doubles market. Like, don't
Hmm.
focus on the home runs, just focus on singles and doubles, buy at a great basis. And I'll just tell you where I stand is
Yeah,
I'm trying to buy attractive deals, a great basis, and great properties. And so great basis is under market value. So you can look at that in multiple ways. It could be replacement cost. It could be based on a cap rate, based on the amount of income that the property is producing and what market rents are, but also keeping in mind that rents could go down in a
sure.
recession, factors like that. But those are really the factors for me. I want a great property in a great location with great attributes. And so, desirable characteristics of that property. So, with flex buildings in a nice location, a nice setup with the amount of access doors, man doors. If it's a dock height door, if you're targeting that kind of tenant, or just a roll up door for those types of tenants. So, desirable properties that I'm going to be able to lease up fairly easily in desirable locations. Generally, my markets are over 100,000 people. You can find some deals in these real small markets, but that's a little bit scary to me when you
Yeah.
start looking at a town of 10 or 20,000 people. And man, it might look good on paper, but to me, those small markets have quite a bit of risk. And so, yeah, so I'll throw it back to you. How do you think about deals in terms of like, are you looking for a home run on day one? Or are you just looking for solid real estate with value add potential that's gonna do well over time?
Yeah, my philosophy has probably changed over time, and I am a bit of a victim of my own success because when I was first starting out, money was tighter, so my buy box was a lot narrower, right? I would only move on something that was a grand slam or a home run at a
Yeah.
minimum, right? Because I just didn't have the ability to make the income to save for that next property fast enough. So there was no point for me to reach for anything just for the sake of, buying a property. I wanted something that really yielded well so that I could use those returns to reinvest in the property or build the snowball to the next property. That's what I've done over the last decade is turn one deal into the next, either through exchanging it in a 1031 or rent stabilizing it and using the cash flow to find the next property and taking that 1 year at a time, one deal at a time mindset. So I'm right there with you. I think as your portfolio grows and you have the available capital either through your own means or through partnering with investors or just individual partners, you can start to open up your buy box a little bit more. I found over time that we've stepped over some really good deals that others would have loved, and truthfully, maybe we should have even gotten them under contract and either tried to just wholesale them to somebody else or brought partners along. But we just kind of flat said no to them because the returns weren't meeting our expectations. And I think over time, as you evolve in your real estate journey, you need to be more open to those so that you can increase deal flow. So that's kind of where I'm at in my journey now. I am looking at deals that I probably wouldn't pursue before, but only because those are really good deals for other people. And if I can partner with them and create a win win and create that education scenario where they can learn from the deal and I can get a piece of it through my knowledge, I'm more focused on deals like that now.
I'm totally with you. When I was first starting out in real estate, I had big goals. I was a special ed teacher at the time, and I wanted to stop teaching. I had this vision of being a full-time real estate investor and no longer being tied to the teacher's
Yeah.
schedule. And so real estate was my conduit for getting out of, my rat race, so to speak.
Yes.
And when I would underwrite these single family homes that I was going to flip, I started out underwriting them at I was going to make $40,000. That was my criteria.
Okay.
And so, after rehab and after debt and everything, I was going to walk away with 40 grand at the closing table when I sold it. So in general, I tried to be through with a house close to close in 6 months. So if
Okay.
I can make 40 grand in 6 months, that's like twice the amount that I could make teaching. So if, I do that twice a year, 80
Sure.
grand, that's like, almost twice my teacher salary. What I was not accounting for at the time, this was a beginner's mistake, was taxes, income taxes. When I was first starting out in real estate, I was thinking, oh, 40 grand, sweet, I just made 40 grand. No, I didn't just make 40 grand. I really just made like 25 grand because
Yeah.
15 of that goes to taxes. But yeah, I mean, as I got momentum in real estate, and I started getting more of these single family flips, I increased the margins that I wanted. So it went from 40 to 50, 50 to 60K of what I was underwriting for. And so I got to a point where I was actually doing fewer deals with higher margins.
Yes.
And I think, for me, those were pretty much, those were like my bread and butter. I mean, at the time, I would call that a home run of a deal if I could make 50 or 60 grand on a single family flip. Um, but I needed that. I needed that income because I had these big goals. I wanted to build my income quickly in a short amount of time, and so I needed those home run deals because I was
Yes.
trying to build this capital in a really short amount of time. But then, as time has gone on, and this is kind of an idea I've been thinking about a lot, is just having less desperation. Because when you're in those beginning stages and you're like, I just need deals, I need to make a bunch of money, you're willing to do a lot of deals that maybe later on in your investing journey you rethink and you're like, oh, the margins aren't quite what I'd like them to be, or there's too much risk, or there's no long-term strategy here, or it's not in a great location. Some of those early deals, I took some risks and they almost always worked out. But in
Yeah.
hindsight, it's kind of a high risk, high reward. And so, yeah, I think as desperation for deals decreases, you can be more selective about deals and get deals that are more in your wheelhouse.
Yeah. And I think about short-term deals, medium-term deals, and long-term deals. The value add commercial stuff that I buy now, I think about it kind of on a forever basis. Like I wanna buy and hold that property for a long time, right? So like that short term buying it and selling it just to make 40 or $50,000 is not part of my calculus, but it once was. I flipped houses early on in my real estate journey, and I think that's a great way to get started for anybody listening to this podcast that hasn't made that first move. I think flipping a house, you know, if you can find it and you can finance it and you're willing to roll up your sleeves and do the dirty work to make that 40, 50, $60,000, that is a great way to build the foundation for your snowball in real estate investing. And it doesn't mean that you need to flip forever, and it doesn't mean that you need to stay in residential forever. I had two residential houses, one I was living in, another one I bought and flipped and then turned into a rental. And then those two properties became a catalyst in the money was 1031 and it went in different directions. But then I bought value add commercial real estate and just kind of built that snowball. And it is possible to go that way, especially if you're intimidated by the purchase price or some of the terms and the knowledge needed to get into commercial. So I think that's a great place to start flipping a property. But I do agree over time, your mindset, your term in which you're viewing the deal changes, especially if it's 1031 money, which I've done. I want to keep that asset and keep that taxes behind the 1031 exchange and in the property for as long as I can, if not in perpetuity. So I'm just thinking about it on a different time horizon than I was early on in my career.
There's so many reasons that it is okay to start with small deals. I feel like there's all this pressure, or the talking heads on social media and on podcasts are saying go bigger faster, do bigger
Yeah.
deals, 10x. And I I think maybe I have a little bit of a contrarian viewpoint on this, whereas I feel like it is perfectly okay to start with smaller deals, especially if you're doing it on your own, maybe with a partner, and you have limited experience. Because
Yes.
when you're doing these, when you start with a big deal or you're doing a big deal, your mistakes are compounded. Whereas if you
Absolutely.
start with this small deal, the first deal I ever, one of the first deals I ever did, I bought a single family home for $67,000. I bought it from a wholesaler. I flipped it, made lots of mistakes. I ended up making money on it. But man, if I would have 10x'd that deal instead of buying it for $67,000, bought it for $670,000. I mean, there are a lot of mistakes that went along with that deal, and those mistakes and the dollars just get compounded on the bigger deals. So I feel like for people just starting out, it is perfectly fine to start on a smaller deal. Learn the lessons that you need to learn on small deals, whether it's through financing, working with contractors, materials, trouble finding tenants, trouble selling. Um, there's so many reasons that a small deal can be beneficial for an investor trying to learn some lessons, because it is so much easier to recover from a small deal than it is to recover from a bigger deal, especially if you're using investor capital and you've got this big deal and you made a bunch of mistakes because it was your first deal. And now you've got a damaged reputation and you have to go repair relationships or repay investor capital on a big deal. I just feel really strongly that it is perfectly fine for investors to learn lessons on small deals and make your mistakes, take your licks, and have some successes. Build your confidence on those small deals. And then down the line, build up to bigger deals. And that was smaller deals are how I built up my capital. I was a
Yes.
teacher. When I started investing, I didn't have any money. And so I started on these small deals and I made 30, 40, 50, sometimes six figures. Those were the rarities, but I did have those great deals where I made $100,000 or $200,000 on a single deal. And that's where my capital came from.
Of course.
And so, yeah. And so you learn those lessons, build up your capital in order to do those bigger deals. The bigger deals are gonna come, but you got to build up your capital and learn the lessons on some of the smaller deals first.
Yeah, I totally agree wholeheartedly with everything you just said. I think the concept of apprenticeship is as old as time, right? You want to learn your craft before you're fully responsible, for all the financial loss or all the, just all the mistakes and all the things that can go wrong. Why would you not want to try that out and get proof of concept and build a capital snowball? It's like baseball, right? You start out in the minor leagues, and as you learn the game, as you get better at the game, you get promoted through double A, triple A, and then you're ready for the major leagues. So, I think that everybody should start out partnering with somebody like me or you or somebody that go to a real estate meetup. If you have a friend or a family member that's doing real estate, be curious about that. what I found about this tribe, this community we have, is we are so giving of knowledge and time because we're so passionate about it that we will give back in any way. And learn how to do it yourself. Maybe it's not for you, but how do you want to find that out? Do you want to find that out on $1 million deal where you've mortgaged your house or your 401k? Or do you want to find that out on a smaller scale deal that, you know what, this really wasn't for me? So I totally agree with everything you just said.
And social media and LinkedIn is littered with people trying to sell coaching programs and trying to teach us about real estate. And when I dive deeper on some of these people, I find out that I have like 5 or 10 times more experience than some of
Yes.
these people. It's like some of these people have closed 1 or 2 deals and then they go on social media and they try to launch a coaching program to teach other people how to invest in real estate when they've only closed 1 or 2 deals. And yeah, and they try to convince people that they should be doing bigger deals. And there are certainly plenty of exceptions to what Mike and I are talking about. And there are going to be plenty of people that disagree with us. If you disagree with us, reach out to us and tell us why we're wrong, why newbies should be doing big deals. I think, Mike, you hit on a couple of the exceptions, like if you're partnering with someone or you're a part of a larger group. If you are working with people with a lot of experience, that can be a great way to learn lessons. But if you're a solopreneur and you're looking to do your first deal, I think it's a really dangerous proposition to go out looking for a multi-million dollar deal for your first deal. So cool, Mike. This has been awesome. I want to go towards the tail end of our conversation, and I'm always interested in the people that I follow and listen to and connect with. What are they consuming? What's influencing their thinking? Not consuming like food and beverage wise, but like what's going into their head, like what sort of thoughts and thought leaders and what's influencing them. And so I want to kick it over to you first. Do you have any recommendations? Anything? This could be podcasts, it could be YouTube videos, it could be books, it could be something totally unrelated to commercial real estate, something that's been influential to you that you feel like a listener should check out.
Yeah, I can tell you what I did. I don't know if it was the best path, but for me, I always tried to read 5 to 10 books a year, right? So I really wanted to kind of build that foundation of financial knowledge and business knowledge, and then also interpersonal mastery. You know, how can I better improve myself? How can I learn to work with others better? How can I be more effective as a husband, a dad, a business partner? So, you know, I read a lot of the classics, right? The ones that you hear everybody talk about that resonated with me: the 4 Hour Work Week, Rich Dad Poor Dad, How to Win Friends and Influence People. So if you're interested in learning and you like reading books, I would recommend just, you know, try to take on a handful a year, 1 or 2 a month, and just kind of build your knowledge, build your wisdom. I think that's wise for anybody who wants to succeed in business and in life. And then I'm like you, Jonathan. I'm a podcast guy, so I've probably listened to many years worth of podcasts in the last 10 years. As I started out with kind of nothing in real estate, really no knowledge of how to do it. I didn't have a personal connection or a mentor. I kind of chose to do things the hard way, maybe too stubbornly, but the knowledge I gained from podcasts was incredible. But I think more than that, it was the inspiration, right? Because you're hearing from people that are doing it. And it was easy for me to form a vision or put myself in that scenario where I really just attached to the thought and the feeling and the emotion of sometime in the future, I didn't know when it was, I could build a completely passive path to income through real estate. That's what I wanted. And I remember one podcast in particular. It was the Bigger Pockets podcast. It was 5 years ago. I looked up the date, number 326, and it was a live podcast that Brandon and David did with the GoBundance guys, and they talked to them And I was just blown away. I realized that these guys were just living life on a completely different level than I was. And they were thinking about life and money and success in such a different way than I was. And it was just so eye opening. I must have listened to that podcast 15 times and I drew so much inspiration from this 360-degree view of success where you succeeded in business, you succeeded with your family, you succeeded with your health, but you also found time to enjoy and smell the roses, because I was just working so hard at the time that I needed balance in that way. And that was a great, great podcast for me. And I'll never forget it. And I actually listened to that podcast when I had two residential houses. I had no commercial assets. And, that was actually less than 5 years ago. So I'll never forget where I was or what I was doing the first time I listened to that one and how it changed my line of thinking.
Can you mention which episode that was,
It
if
was
people want to check it
bigger,
out?
yeah, Bigger Pockets, episode 326, and it was from April 2019.
I did not know you were going to talk about this. I remember exactly where I was and what I was doing when I was listening to that episode. So I no longer listen to Bigger Pockets podcasts. Bigger Pockets was totally inspirational and transformative in my investing, but really in the early years.
Yeah.
Um, and but really, I since Brandon left the podcast, it's kind of taken a turn in a direction that I don't quite connect with, and so I've stopped listening to it over the last few years. But that one episode, episode 326, I remember where I was. I was working in the basement of the single family flip on Greer Avenue, and I have this weird thing of when I listen to so many podcasts, and the really influential ones, I remember exactly where I was when I was
I'm the
listening
same
to it.
way. Absolutely.
So yeah, so I remember exactly what I was doing when I was listening to that, and I can't say I listened to it 15 times, but I had a similar takeaway that it was like a panel. There were probably, I don't know, 5 or 6
Yeah.
guys on this panel, and they were all talking about having balance in life and kind of crushing it in all these different aspects of life. And I remember having a similar takeaway as you, of just thinking, wow, this is really inspiring. This is really impactful. I aspire to have what these guys have, and I'm sure they have their fair share of challenges, but it was a really cool discussion. Was that This is going to sound strange. Was there the one? Did they tell the one story in that episode where the one guy was talking about getting weird in the woods?
Yes,
Is
yes.
it
He
that
says,
episode?
getting the goods in the woods. Yep.
The
He's a big
goods in the
skier.
woods.
Yep. So he's a lifestyle guy, and I think that that attracts a lot of people to real estate too, because their lifestyle comes first and they use passive income to get there, right? So I was just so blown away as they started talking about their horizontal streams of income, right? The one guy's like, yeah, I have 150 sources of passive income through real estate and businesses and intellectual property. And they, truth be told, those guys are a little bit older. One of them started in the early 80s and the other guy started in the mid 90s. But that was something that I could project on myself and say, I got my start in 2013 in real estate, right? So they started the race earlier than I did, but it was proof of concept that if you start early, real estate is a get rich slow strategy, but it really pays off over time. And yeah, those guys are just doing it at a level that I wanted to be at. And at that time, like I said, I had two streams of income, but I'm close to 30 now, so it can go fast. And I hope that people are just starting out use that as motivation to know that this does work if you stay the course.
That was the OG Bigger Pockets podcast, episode 326. My recommendation is more recent than that. I listened to a recent Tim Ferriss show podcast. Um, Tim Ferriss Show. That's one of my go-to podcasts. I admire Tim for a lot of different reasons. He has evolved so much since his 4-hour work week, 4-hour chef, 4-hour body days.
Yeah.
I think that's where a lot of people got connected with Tim Ferriss. Hold on one second. My 4-year-old just walked in the door. My 4-year-old wants me to put a video on for her. So when we're finished up here, I need to go upstairs and do that. So Tim Ferriss has evolved so much in the last 15 years, and he is now really kind of an icon for personal development and excellence in a lot of different areas of life. So my recommendation is from his January 23rd episode with Noah Kagan, January 23rd, 2024. The episode's like 3 hours long. And so I always listen to my podcasts on 1.2 speed so I can get through them 20% faster. But Noah Kagan he worked for Facebook, he worked for mint.com, and the first 30 to 45 minutes is kind of more interview style with Noah, and he has a new book out and you can learn all about that. But then about midway through the episode, it becomes more of a conversation between Tim and Noah.
Yeah.
And for a period of time, Noah is interviewing Tim, and essentially they're talking about how to be successful as an entrepreneur in 2024. And Tim doesn't often bring a lot of his personal thoughts into episodes. It's, he's a good interviewer, and so he's trying to get stuff out of his guest, but you really get a lot of Tim's insight on what works. They talk about things like cold emailing, what to put in the subject line, what to put in the body, how to get people's attention, raising capital, how to acquire customers, how to think about starting a business, short-term versus long-term. They just go into this incredibly helpful, deep, rich discussion about how to be a successful small business owner, entrepreneur in 2024. What's working, what's not working. And both of these guys are incredibly knowledgeable about marketing and getting influence on listeners and followers. And so I just found this episode to be incredibly insightful. So check that out. That's the Tim Ferriss Show podcast from January 23rd.
Great recommendation. Yeah, I'll have to check that out. I also dabble with Tim. I don't catch every episode, but I'll check that out for sure. And ripmint.com.
That's what I heard.
Gone too soon, man. That was my go-to, and I'm devastated.
My wife handles a lot of our finances, and so she's moved over to, in the last couple of years, moved over to a different platform.
Yeah.
I think she uses You Need a Budget.
Yeah.
And like once a year I'll log into it to take a look at it. But yeah, I mean, mint.com was a free kind of budgeting resource, budgeting tool that could help you keep track of all your finances. And I'm not sure what happened, but I think it was acquired by a private equity company, and then they shut it down. So not sure what happened there. But cool, Mike, this has been great.
I really enjoyed it.
We didn't get through even all of our outline, but that's okay. We'll save some for the next time. There will be another time. We'll do this again, listeners. If you enjoyed this, if you have questions for us, if you have topics that you want us to discuss, feel free to reach out to either one of us. I am most active on LinkedIn. You can reach out to me, Jonathan Hayek, on LinkedIn. I generally check and respond to messages there. Mike, if people want to reach out to you, connect with you, where do you want to send them?
Yeah. Michael Holdwick on LinkedIn. I respond to messages there, and I want to talk to people who are interested in learning more about real estate investing. We also have an Instagram channel for our business. It's at Protein Commercial. So you can find me in either place. And like Jonathan, I'm pretty responsive. So please reach out.
Mike, This has been awesome. Thanks for joining me.
My pleasure. Thanks for inviting me.
Listeners, if you enjoyed this conversation, reach out to either one of us. We would love to connect with you. We love talking about commercial real estate, and we just love connecting with other people that love commercial real estate. Thank you so much for listening. Until next time, take care.